Hi guys, Dan and Kai here again from Crescent Mortgages, and today we're going to be talking you through the mortgage application process in the UK. So that's a process that most of you will need to go through if you're looking to buy a property, unless you're fortunate enough to have the money to not need a mortgage, which I guess is rare, isn't it? We're going to talk you through the 5 key points of the process so you understand what to expect, and we're also going to give you some myths at the end. So these are tips that you've probably been given elsewhere from other mortgage professionals, but actually we think they're wrong, don't we? We think they're just there to scare you, and actually we don't think you need to worry about them too much. So we're here to kind of reduce your stress. So make sure you stay tuned to the end to check those out. Without further ado, let's jump into it. Okay, so the first thing you should do is, Kai?
Speak to a mortgage professional.
Ideally a broker.
Ideally a broker.
Because they've got more lenders to choose from than just one specific lender.
Exactly that.
What are they going to do?
That. So a broker will have a chat with you and run through your circumstances. So before you found a property, they're going to go through how much you earn, your outgoings, your credit cards, loans, what you're looking to buy for, what deposit you've got available, credit history, how much can you afford, loads of stuff to just get a good picture of where you're at. And at the end of that, we'll issue you a mortgage in principle or a mortgage promise, which effectively is that broker telling you you can get a mortgage. Not ironclad, but you can get a mortgage. And that bit of paper is really important when you start going to estate agents and Rightmove, etc., because you'll need that bit of paper or that certificate to prove that you are mortgage ready.
Yeah, exactly. Once you've got that certificate, you can go and look for a property. And then once you've found a property, we're then looking at number 2, which is prepare your mortgage documents. So your broker will clarify what's needed, but when you apply for the mortgage, you're going to need to have most of these, if not all of these documents ready. So I guess the obvious ones are?
3 months bank statements, pretty much for everyone you'll need. And then proof of deposit when you're buying. So proof of deposit, if it's in savings, will generally again be 3 months bank statements.
They can ask for more, but 3 months is common.
It's normally enough. If you're getting money from mum or dad as a gift, let's say, again, common deposit, then normally a letter or template letter that, again, your broker or the lender could give you. Those are the 2 that most people need, aren't they? The deposit and bank statements. And then it differs depending on
your circumstances,
your own circumstances. Yeah.
Makes it mainly employment. So if you're employed, generally 3 months pay slips is enough, providing you've got 3 months in the job. If you don't, then potentially a contract or a job offer letter. If you're a sole trader, probably just your last 2 years tax calculations and overviews from HMRC. If you're running a limited company, then you'll probably need those last 2 plus your last 2 years accounts. You'll need, potentially, if you don't pass the ID check, potentially ID, so passport, license, proof of address, so documents showing your current address, which is normally kind of bank statement, council tax or utility bill that's been posted to you at your current address. Or sometimes online documents aren't accepted. So
driving license is a good one for address proof.
Yeah, providing that it shows your correct address. So prepare your documents. Your broker will confirm what's needed, but get those ready to go because, like I say, they'll normally be needed when we apply for the mortgage.
Yeah.
Number 3, pick the right mortgage. So again, your broker will assist you with this, but the next part of the process, which is generally the last thing you're going to do before you apply for the mortgage. So you'll need to pick the type of scheme you go for. Your broker will help you, but normally you'll pick fixed or variable and short-term or long-term with the initial scheme. You might go for a 2-year fix, you might go for a 5-year fix, you might go for a 2-year variable. Your broker will talk you through the pros and the cons to help make your decision. You'll also decide how many years you want to spread the total term of the mortgage. So obviously a longer term will keep your payments down because you're spreading the debt, but it means that you're going to have the mortgage for a longer period and potentially you'll pay more interest overall, or a shorter term, which means your payments will be a bit higher, but you'll be mortgage free at a younger age and it will reduce the overall interest. Bear in mind, you can tweak the term in the future, so you're not making a lifetime commitment at this point. You'll pick the lender, and that's kind of basically a compromise of who's got the best rate and whose criteria you fit with as well, isn't it?
Yeah.
Which, we want to get you the best rate, but you have to make sure that you meet that lender's criteria as a kind of a broker ourselves, we have loads of lenders to choose from, so we'll obviously pinpoint the right one for you. And obviously at that point you'll finalise what kind of deposit the percentage deposit that you're going to be putting down. Is it 5%? Is it 10%? Do you have the funds to put down more? We'll give you the options to help make your decision. Once you've done that, then we will be moving on to number 4.
Number 4.
Very good. What is it?
No, oh, okay. Pick a solicitor. So you might have done a bit already here. You might already have one in mind. You might have been quoted one by agent, by broker, by mum, dad, whoever. But now you need to finalise who you're picking. So part of your mortgage application, one of the questions is, who is your solicitor?
Yeah, so you'll need to know who your solicitor is before we apply for the mortgage, because that will need to go on there. So when you apply for the mortgage, you're going to need to start finding a solicitor quite quickly. Us as a broker, we have a panel of solicitors, so we would always recommend one of ours to our clients, as we can vouch for their service and we can kind of keep an eye on them throughout the process. But you can use whoever you want as long as they're on the lender's panel. Obviously have a little shop around, but they do have a really, really important role in the process, don't they?
Yeah, they do. And the panel bit you mentioned there is important as well, because, excuse me, but I'm going to go.
Panel's important because, shut your mouth, because the lender will have a panel of solicitors in the country that they will and won't work with. So most decent solicitors will be on most big lenders panel, but if they're not, you're going to need to find someone else. So once you know which lender you're going with, make sure you check with your solicitor that they are on that lender's panel. If they're not, then maybe hold fire on instructing them and paying them any money, because you're probably going to need to find someone else. Saved you there, didn't I?
Thank you.
The solicitor, so the legal work, once you've picked, we can instruct them for you, or you instruct them if you found your own. That will move forwards kind of simultaneously with the mortgage application. So your mortgage will move forwards, and the solicitor and legal work will be moving forwards in tandem. The legal work normally takes longer than the mortgage. The mortgage we would hope would be agreed within a few weeks, give or take. It's the legal work that takes the longest, but I digress.
There you go.
And then the 5th and final point is to submit the mortgage application and get the process underway. So I like to kind of see it as to get your mortgage. So everyone's obviously, the main thing is you need to get your mortgage agreed, and everyone's nervous that they're going to get declined. Most people are accepted, as long as obviously we've done the research beforehand, but there are 3 hurdles to get your mortgage agreed, and this is basically the same for everyone. So the 3 hurdles are, so when we submit the mortgage application, they will run a credit check. That's pretty much the first thing that they will do. If you pass the credit check, then you can go ahead and finalise the application and get the mortgage process underway. If you don't pass the credit check, unfortunately that lender has declined you. And then at that point, we're going to need to look at your credit in a bit more detail to make sure there are no hidden issues, or try another lender if we think that's an option. But the first hurdle is pass the credit check. The second hurdle is the mortgage valuation. So the lender will need to send a surveyor to the property normally to have a look, just to make sure they're happy with the basic condition and that you're paying a fair price. That's often free, or if you do have to pay for it, it's normally minimal, maybe £100 or so. And the third hurdle is the underwriting. So they will assess your documents. They'll look at your pay slips, possibly your bank statements, your proof of deposit. They'll ask any questions that they need to ask to clarify certain points. And when they're happy that everything stacks up and the valuation has come back successfully, and obviously you originally passed the credit check, they will then issue your mortgage offer, which means that they have fully agreed the mortgage.
Yeah. What he said, exactly what you said. Yeah, no. And that is it. You get through those 3 steps.
And then I guess to summarise, so that's the kind of the mortgage process. From there, once you've got the mortgage offer, it doesn't mean that you're just going to get the keys straight away, does it?
No,
Why
no.
not?
Well, Dan mentioned the legal work often takes longer. There's a lot more waiting around on the legal work. But effectively, once you've got your mortgage offer, that legal work will keep going. And at some point, maybe a few weeks later, possibly a few months later, depending on the legal work, the situation, your chain, whatever it may be.
Every case is different, isn't it?
Yeah, it does really stretch. It could be 8 weeks from offer accepted to completion. It could be 6 months. It does vary a lot. But once you've gone through that legal work, well, the solicitor's gone through the legal work for you, you then get to a point where you exchange, which is when you legally own the property, and then completion when you get the keys.
Which is normally shortly after.
Yeah,
Exchange is when you're signing the dotted line to commit to buying that property.
Yeah.
So you can't really pull out after that without potentially getting sued. And then normally, on average, a week later, but that can differ, you'll then complete where the money's been transferred from the lender via the solicitor, the vendors have received their money, and then you get the keys, and then you become the legal owner of the property. Final couple of points. So these are the myths. So we think these are really, really, really important because we've done some research and people are giving out tips, and actually, we don't think they're that important, do we? Now, we don't want to kind of diminish them entirely. Some of these points, they can potentially make a difference, but we've rarely seen them cause problems, have we? So we'll just smash through them. So there's 4 key points that we want to highlight. So the first one, do you want to jump into it?
Yeah, the first one is bank statements or bank account conduct or something on those lines.
We see a lot of scaremongering, don't we?
Yeah, it seems to pop up on most videos somewhere that your bank account needs to be squeaky clean and perfect. And don't get me wrong, that's obviously not a bad thing if it is. But if if it was around Christmas and you spent a lot more money on shopping all of a sudden, that's not really going to make much of a difference.
Yeah. If you went on a couple of nights out, oh, yeah, unplug that.
Let's turn it down.
Sorry about that. If you've been on a few nights out, if you've spent £100 in revolutions, it doesn't matter. People always call us and they're terrified that they've spent a bit more, they've gone shopping, they've been on a night out, they've put 20 quid into Bet365. I've never seen a mortgage application decline for those reasons. It's fine, you're living your life. As long as you're not, going into your overdraft significantly every month, as long as there's not huge unexplained transactions, of course they need to make sure that everything's, above board and not fraudulent. But don't panic if you've just spent a bit more money in a given month. We rarely see that cause problems, do we?
Yeah, it's not that.
Number 2, you go.
This would be the electoral. Being on the electoral, that always feels like it's number 1 on everyone's list, is get on the electoral roll for your credit.
It's not a bad thing.
No, it's not. Again, it does no harm, just like having the clean bank statement. It does no harm.
But if the rest of your credit's good, I've never really known a case get declined for it.
Your credit score on various credit agencies might improve because of the electoral roll, but that doesn't really change your actual scorecard, particularly with mortgage lenders. That being the difference between you getting and not getting a mortgage.
Will be very rare.
Yeah, you must be on such a fine line if that's the difference. Exactly. Anyway, and that's maybe not getting it with one lender. There's other lenders. So it is, again, it's one of those, does it make a gain? Yes. It's a marginal gain at best. It shouldn't be in a top 5 list or in it shouldn't be in any.
We're not discouraging you from doing it, of course. Anything that gives you the edge on your credit, great. But if you're not on the voters roll, don't panic. It's not necessarily the end of the world as long as the rest of your credit is squeaky clean.
Yeah. Third one?
Just had to check my notes there. We're nearly there. Third one, applying for a mortgage to your own bank rarely makes a difference. Some people think that they're more likely to accept you, they're not going to need to see the same documents, they're not going to need to see bank statements. Rarely does it make any difference. Most lenders don't give better rates to their existing customers. 1 or 2 do, but most don't. And they're going to need to go through the same assessment, the same credit check, look at the same documents. So don't confine yourself to that one existing lender just because you bank with them. The likelihood is that if you're limiting yourself to one lender, you may not be getting the best rate. So if you have to apply to a different lender, absolutely fine. That's completely normal. And the 4th and final one, I guess, is we get quite a lot of people who feel that they need to be employed for at least 3 months or at least 6 months before the mortgage lender will accept them. Now, don't get me wrong, there are some lenders that require that, but actually there are lenders that are fine if you've got 1 month pay slip in the job, or some of them, as long as you've got a continuous track record in another job, actually, and there wasn't really a gap, some of them don't have any minimum. Some of them can even take a job offer in advance. Obviously, you are limiting your options, but there are options there. And again, if you're in a new job and there's a probation period, again, a lot of lenders don't mind that, do they? So again, if you are just about to start a job or you've just started a job, don't let that stop you. Speak to a mortgage broker and they'll be able to have a little look and work out. As long as you've got no other significant criteria limitations, that's probably not going to be the end of the world at all. So just a couple of myths there that we just want to kind of reassure you aren't necessarily the end of the world. I think that covers everything.
Yeah.
So nice and thorough, but again, any questions, just get in touch. We are mortgage brokers. We can assist you with your mortgage. Head over to the website, give us a call, message, comments, and we'll see you next time. Thanks a lot.